Hey guys, it's Friday, March 11th, 2016. I'm going to review yesterday, Thursday, both the Globex and US market open hours to talk about the trade setups, and then we'll kind of talk about what could happen today and then going into next week. So right now we're actually at the resistance level right here. If it breaks to 38.37, there's a potential for this thing to go all the way up to the $40 level. The next really resistance that I can measure is about the 38.86, and then between there and $40, not too much. And I pulled out the hour chart and maybe in my other videos to kind of show you guys that. So we broke out of these resistance areas earlier in the week between here and this level, you know, where there was consolidation, and this was kind of the support. Like I said, the 38.86, looking at the these levels here where there was a bounce. You see there's a low value area intermixed with high value just between this period, but really the low value area for these periods here also lining up with 38.86, 85, and then you got that little bounce here before it fell and broke through, and then went all the way back down to the $29 level or $28 level. So we're back into that range. It could hold, but if it breaks above here, like I said, it could easily go up to the next resistance at 38.86, whether it's during the Globex session or during the US hours, or it could just shoot all the way up into the $40 level, and then we could look for this thing to maybe push back down, and then the next level obviously will be at the 41 level. So just some things to look at and think about, and then let's just go into the trade for yesterday and today. Alright, so alright, same thing guys, we got the consolidation, right? Finally breaks out this level. It's kind of a bigger box. Let me go ahead and remove that, give you a little bit better view. So let's just say this is kind of our level, right? Finally breaks out to the downside, comes back up, and then pushes down, right? And when it comes back in, pushes down one more time, okay? And at this point we're thinking, all right, downtrend. So once it came back inside, it ends up going all the way back up above the previous highs, and at that point we're thinking, all right, this thing might continue breaking up. But instead, right before and after the US market opened, it ends up showing weakness, comes back up, hits this resistance again, and it does not break out, and then it starts collapsing. So at that point we're thinking, all right, short bias. To be honest, I mean, this is a 5-minute bars, and I'll show you on the other indicator where you could have got in, but it was very hard to get in. So if you didn't get in here, really you look at the lows here, and this might have been your real entry short, as it came back up and tested and then started to come back down. So we'll talk about some entries here, and then we'll also talk about the bounce and why it bounced down here. And you can just see, if I zoom out, support levels obviously here, and then just looking at this range, it could have been all the way back down to $37 level. It did not. Came as low as the 37.20s, about 20 ticks away. But this consolidation here served as support and actually ended up reversing the market right before lunch. Okay, and oil has been known to reverse around that time period anyway, around 10:30, 11:30. So we'll actually go into the indicator now and see what we could have done. So what I want to show you, and I made a lot of mistakes yesterday that I didn't record, but we had a lot of movement inside profile. That finally broke out, right? Came up and then came back inside profile. Hit that line in the sand and ended up moving up. That's fine. Broke out, but then came back inside. So there's a lot of no commitment, right? At this point, you just got to be patient, especially when it's just making erratic movements inside profile. You don't want to take every retracement. You always take the first retracement, right? That could have been a trade, right? And if you would have taken a second trade, that could have been a trade because it broke out again. But you just don't do it every time it breaks out and then comes back inside profile. You want it to break out, hit that profile level, hold it around there, and then push up, right? That's signal strength. So instead we see weakness. It ends up going down, hitting the low profile area, which ends up becoming support, hits from profile to profile level, and then ends up coming back down again. So at that point you guys say, okay, well, it should have broken out. If this was support and this thing was really going to push out, right, should have broken out and then come back and retested. So this was definitely not a buy. And then this whoever was fading the market here, thinking this thing is going to continue moving up, ends up getting stopped out. You get that losing position for the group that's buying here. And then not only does it break this low, it also breaks the low value area here. And this was a very short movement. So it breaks low value area, right? Normally you want to see a nice push away and then retracement and come back down. But there was no Fibonacci retracement. It just came down, broke the value area, and within about 10 ticks or so, after bouncing it twice, just collapses. So that was a 10, 20, 30, 40, 50 tick or so move on the downside. And then at that point, you're just waiting for a signal to come back into the market to sell. This could have been one right here, but it wasn't much of a move. It was about 20 ticks or so, maybe less. And then it just kind of consolidates and bounces and keeps finding support. And at that point, you're thinking, all right, this thing, obviously I'm looking places to sell. Where can I get in? Well, there really wasn't any time, because then it comes back inside profile. Then you don't want to sell once it comes back into profile. You're thinking to buy, right? End up trying buying here, and they're getting stopped out. Came all the way back down. Could not push below these lows here, right? Came back inside again. Then it did this dance again. So at that point, you go, okay, well, if I'm still a seller, because the trend was moving down, right? Broke back in, strength did not move the market to the other side, and now we have sellers moving this thing back down. Not only did it break low value area, but the trend bias shifted again. So then we look for it to retrace, right? Broke inside profile, but came all the way up to this line in sand, developing value area, which we also use as reference. So same thing, same setup, low value area break, retracement, up to either the low value or the value area, and then we look for the signal to sell. Came down, bounced, would have held our stops, and this is a little bit more difficult, especially when you see it move and it comes back up, right? You don't want to come back and come back beyond your stop, but you have a 13 to 15 tick stop normally when you get in the market, so you would have had enough room for this thing to kind of move around until it finally breaks. But honestly, in real time, that was a lot harder to hold on to than actually seeing it on the charts after the fact. So, but that was another 10, 20, 30, 40, almost 50 tick move there. So if you would have missed this trade over here, you had this trade here, it's a lot harder. Now if you missed this or you didn't get in, right, and then you saw this one would have been a good entry to get in here, and then you could have made it all the way down to the lows, at least targeting down here. And once it broke, you could have left that one runner. And then really the key that I was looking at was, okay, if this thing doesn't break and continue moving back down and comes back inside profile, there is a chance that it could come back and reverse the other way around. The reason why I said that was because, and I'll show you the other charts here for the indexes. While this was happening, the indexes were pushing beyond these support levels, but then came down to another pretty strong support level down here. You can't see it on that there on the ES. Yep. Anyway, so there was a support level here, so I saw it kind of bounced, didn't break, held, and then bounced again. So when I saw that bounce, I was thinking, all right, this is at least going to move to one resistance level above, which could have been up here or here, the areas that it broke, right? And so with that kind of in mind, and knowing the fact that the indexes and oil is kind of correlating, I was looking for a possible reversal of the market. And what you do is you wait for the price to come back inside profile, break. So in a downtrend, you're waiting for this to break inside low value area, right? have a nice strong move, and that was about 20-30 ticks, so that was good. And then it came back for a retracement, right? And so as soon as you see that Fibonacci dot, and somewhere closer to the low value area, if it was exactly where it broke, would have been better. But excuse me, let's see this one. Let me zoom in real quick. That came back in, hit that low value, pushed up. All right, so buyers are now attempting to reverse the market. Came back down into this level here, right, and ended up pushing up from there. And that first test back into profile would have been a valid trade. And if you would have held on to any contracts, you could have went all the way up to the other side of the profile, which was a pretty significant move. 10, 20, 30, 40, 50, 60, 70, at least 70 ticks right there. And then obviously into the next day, it broke out even higher, but you wouldn't have held it that long. You're at least taking some targets on the way up, at least maybe midway here, and then left the runner all the way to the other side of the profile. So that would have been a pretty decent trade as well. A really good trade, actually. But that was just kind of the thought process. Apologize, I didn't have a live video. Was pretty caught up with the other things going on today, and had a few losing trades and was frustrated. So the lesson that I learned really, and that I constantly am having to remind myself, is just to stay disciplined and be patient. And that was the thing, because you have to really look for that particular setup. If it doesn't fit the parameters, don't take it, right? And I was taking too much risk. Even though I was getting stopped out, I was looking for second attempts, and trying to read the market when it's not as clean as it can be. It can lead to disaster. So basically, I gave back all my gains from the prior day, but I'm still in the Top Step Trader program. So far, I haven't violated any of their daily loss limits or total loss limits. So back to the drawing board. It is frustrating, but if you want to be a good trader that can actually make money, you have to stay disciplined, and that's really the lesson. And sometimes you got to be reminded about that, and the market reminds you. So, and in hindsight, obviously, after everything happens and you have that intuition, you go, okay, well, the market might push back. Let me wait for that trade. Well, all you had to do is wait for this thing to come back in, right? And it comes back in. You might not have taken that trade there, right? But if you waited long enough, it would have came back down and retraced, which is the setup that we use, or at least that I use, and then that could have been your entry right there. Even if you were just moving, the 10, 20, 30 ticks right there, that would have been a nice move at the end of the day, or during the U.S. market hours. Getting a little bit later, I normally don't trade this late at night here in Korea, which is early morning in the States. Usually I'm done somewhere around here, but I missed this trade here. Moved way too quickly. I was waiting for a retracement after it pushed down. This retracement down at these lows really wasn't a high enough reward to risk for me, because we had moved so far away already, right? We had moved so far away. And then on this chart here, visually, yeah, you got that low here. Let me blow this up for you guys. And you got this low here, this low value area. So once we broke through there, if you're patient enough and came all the way back up, yeah, you could have taken this trade. Unfortunately, I didn't. And that's inherent of just using kind of eyeballing versus also using indicators. My methodology includes using the indicator, but if I didn't have it, yeah, I would have probably taken that. And then just say that we entered here at the 37.82, which was a price point that we were looking at in the past. Even that, if you were to put that stop at here's a 92, just 10 ticks away, but if you were 13, 15 ticks away, that stop would have held, and then you would have made a profit on the way down, at least 20, 30, 40 ticks, depending on how long you held it, even more. So it's great to be able to learn lessons and share them. I hope you guys got something out of that as well. And then once again, like I said, don't be afraid to be flexible and when the market changes direction, to change your bias. So, you know, this was a downtrend, which we thought was going to develop in an uptrend after it broke out of the highs here and above high value area. Did not hold, moved up just a little bit and then came back inside. So we had to readjust our bias to the downside, and then it moved very quickly. So you had to be very proactive and get in when you could. But it didn't meet my parameters, so I let it go. And then the other ones I kind of missed. And I'll show you. Because once it came down, did this. And then once it came back up into that profile area, I saw a trend change. So I was looking for this thing to come back inside profile like it did over here, right? I was hoping for this to be I was hoping for something like this to happen over here, but it did not, right? And it ended up going up and then failing and coming back down, right? So then at that point I'm thinking, all right, I should have just kept my downward bias or the a sell bias the whole time because of this trend, right? Until it comes back around. And then obviously this would have been the more productive or profitable trade here. And it was really only the second time that it came back inside profile with the trend change, and then Fibonacci retracement. So although this one would have worked here, but what I like to see is a trend change and a break inside profile, not outside of profile, because this thing could have ran up here, came down, did had a Fibonacci retracement, try to come up and fail, and then just break down and make new lows. So right now we are looking for this thing to break up this recent high resistance, and if it does, we have quite a run. So even during the Globex session today, we could still recover and make a lot of money here, especially if it breaks out of here. We'll come back down, look for a retracement down into the high value area, and we got both the low and high value area, the shorter and long-term chart showing that we are looking for a buy. So all we need to do is for this thing to break out of profile. So with that said, I will close out that review for today. Hopefully you guys are doing well in the markets, and let's continue to learn and be profitable. All right, talk to you guys soon. Bye.